Hello everyone and welcome to the Nomad Hedge. In today's video we're briefly going to review what happened in the market last week and see what we can expect the week ahead. But first, if you're new here, consider subscribing to this channel and hit that like button if you're enjoying the content in this video. Let's start off by briefly going through the markets past week. We saw that the major indices finished higher on resilient third quarter earnings and better than anticipated GDP numbers. Technically, the Dow Jones, Russell 2000 and ultimately the S&P 500 cleared their respective 50-day moving averages. Both the Russell and the Dow had the strongest performances for the week, followed by the S&P and then the Nasdaq. So let's begin by taking a look at the Dow Jones Industrial Average. And as we can see here, we closed positive here for the week, 5.72%. So this is the fourth week in a row now that we're seeing some bullish action here for the Dow Jones. And on Friday we closed 2.6% and even above this 200-day moving average. But if we take a look at what happened previously here, as well as the end of the previous bear market rally here, when we just got above the 200-day and even started flirting with this lower high trend line here. But I think this could be different because we're seeing some pullback action on the 10-year and the dollar index. So if these two starts to rolling back, then I could possibly see the major indices moving higher. But if we take a look at some of the indicators here, beginning with the RSI, we're seeing some overbought levels here, as well as the money flow index. So these has been some good indicators here showing some short-term pullback here for the Dow. And so I would not be surprised next week if we saw some profit taking here. And so possible support levels for the Dow could be the 21-day exponential here. If you see this 21-day, this red line here, it's starting to cross over above this 50-day moving average. So once this one gets above it, maybe the 21-day could act as short-term support. Then we'll just have to gauge the market action on a day-to-day basis. But then on a weekly chart, if you take a look on the weekly, we can see we have a clear buy or an early buy signal here on the weekly chart on the MACD, and on the RSI is showing some signs that it still has some way to go here before we're reaching overbought levels here. So that's how things are looking at the Dow Jones right now. So next week I would not be surprised again to see some profit taking here. And let's move on to the S&P 500 and see what's happening over at the broader index. Moving on to the S&P 500, and as we can see here, the week ended positive here, 3.95%. So this is the second week in a row here for the S&P 500. Unlike the Dow Jones, which has been up 4 weeks in a row, we're seeing some bullish action for the S&P 500 as well. So on Friday we gained 2.46%, and we also closed above this key 50-day moving average. And so on the weekly chart, we're seeing some positive divergence here on the RSI on a negative price action, which has been recording for weeks now. But that just explains us that there's some underlying strength happening beneath the surface here. So on top of that, we also have an early buy signal here on the MACD, and the RSI is showing some room to the upside here before it's getting overbought. But what's also positive is that we're also closed above the 10-week moving average, which corresponds to the 50-day moving average. But this is a clear break above this moving average here. And on top of that, we have the 5-week moving average also cleared, and we got this bounce off the 200-week moving average. But on a very short-term basis, we take a look at some indicators here, beginning with the stochastics and the Williams percent hour, which are short-term indicators. Right, so that's providing us some overbought, oversold levels here, and we can see here we're a little bit overbought here on these two indicators. So next week it would not be a surprise we saw some little bit of a profit taking. And so if we go back to a daily chart here, we closed just below this Fibonacci extension level of 0.5, so that's 3,900 here. So a reasonable target for the S&P still remains at the Fib extension of 618 or 4,000 to 4,100. So once we're above 4,000, 4,100, that's when we have to gauge the market on a day-to-day basis and then just see what's happening next. On to the Nasdaq, and as we can see here, for the week we closed positive 2.24%. Just like the S&P, this is the second week in a row here. But I mean, if we take a look at the Nasdaq, technically this thing looks so awful right now. And so we're finding some resistance here just below the 200-week moving average, and even below the 10-week moving average, which seems to be dead crossing the 200-week moving average here. So I'm not sure really what this means, but I mean, Obviously, it's if you see one moving average crossing below another to the downside, it's obviously not so bullish. But obviously, if we go back to the daily chart here, we did have a minor pullback here, and so we tested this trend line. As you can see, we're still below this 50-day moving average. The Nasdaq still has some ways to go because this thing is down almost 28.6% for the year. But I mean, if we take a look at the weekly MACD, for instance, we do have an early buy signal here, and the RSI is still pointing to very oversold levels here. So maybe we're getting a very strong bounce to the upside here in the coming days ahead. So the Nasdaq could possibly see some positive action compared to the Dow and the S&P, which have seen some short-term overbought levels here. So a potential target here for the Nasdaq would still be this golden ratio here of 0.618 or approximately 12,000 to 12,200. So to the Russell 2000, and as we can see here, the week ended up 6% for this index, and actually was the strongest gainer for the week compared to the other major indices. And on Friday we closed 2.25%, and we made it above this 150-day moving average. But last time it hit the 150-day, that's when we saw a major pullback here within the short-term bear market rally we saw here back in September. But obviously this disappointed. But on a technical standpoint here, we can see that we're above the fib extension of 0.5. So a reasonable target for the Russell 2000 would be maybe around 1900 here. But if we take a look at on the weekly chart, we can also see that this yellow line here, which represents the 40-week moving average, acted as major resistance here previously. If you take a look at what happened back in January, for instance. So we crossed below it, we tried to poke above it as well, and so even back in August, that's when we saw some resistance when we poked above it. So it's key to watch what's happening here in the coming days ahead. We could possibly see some pullback here on the S&P and the Dow. So maybe some short-term pullbacks here for the Russell seems plausible as well. So now that we know that we're a little bit short-term overbought on the Dow and the S&P 500. Let's also take a look at the volatility index VIX for the S&P. And as we can see, or go back in history, we had this double top here, and we crossed below this this higher low trend line here. And so on Friday we closed at 25.75. So this is 30 days in advance, and we can see that people have hedged their positions here, just coinciding with this Fibonacci retracement of 0.618. So this could indicate as well that we could possibly see some pullback, given the fact that we have short-term indicators pointing to overbought levels on the Dow and the S&P 500. Moving on to the dollar index DXY, and just gauge the technicals here. And as we can see here, on a short-term basis, we broke below this higher low trend line here, which was obviously positive, and then we found some short-term support here at the Fibonacci retracement of 0.5. So what's concerning now is that we're starting to pull up a little bit, but we'll just have to see how far this one can go to the upside. So maybe this 21-day exponential could act as resistance here, because it's been a strong support line heavily before. Now, what was good news last week is this clear breakdown below the 50-day moving average, and now all of a sudden we're above it, right? So this 21 days is going to be key here in the coming days ahead. So because we can't declare this thing dead, at least if we're looking at a clear breakdown below this intermediate term higher low trend line, which would also maybe coincide with this Fibonacci retracement of 0.618, and then maybe a bounce from there, the dollar index could possibly find some resistance here before it starts its major roll over to the downside. So that's just something to think about when we're looking at the dollar index. Obviously, whenever this thing goes down, it supports equities to the upside. So if we're moving on to a monthly chart here of the dollar index, we can see, for instance, that the RSI is heavily overbought, and last time it was this overbought, that's when we saw a clear distribution here, and then it rolled over quite significantly under a very long period of time, obviously. But again, we're seeing some technical history here that you know, this high trend line here has acted as resistance as well. So maybe we're just poking at these levels here before we start to roll over quite significantly for the dollar index. But again, Look at this MACD momentum indicator here, for instance. We're seeing a light green here, which could suggest that we're seeing exhaustion to the upside here, given the fact that we're also a little bit negative right now for the month going into November. So obviously, I mean, the strength of the US dollar is having an impact on US companies overseas whenever they convert their foreign currencies into US dollars. And so, I mean, there are strategists at Citigroup estimating that the greenback's recent 10% bump will cut about $15–20 from the S&P 500's earnings per share. So it's having a very strong impact here on the bottom lines here for US companies. Okay, so on the yields front, let's take a look at the 10-year Treasury yields. And as we can see, it's been holding steadily this 5-day moving average here. And recently we crossed below this short-term higher low trend line here, but we found support here at the 21-day exponential, and we're seeing here that we could possibly find some resistance here at just below this trend line here. So obviously, if we take a look at this thing on a weekly chart, which closed negative for the first time after 10 weeks, and so that was positive news here. So if we look at the MACD as well, we're seeing some slowing down in momentum. So if we get a sell indication here on the MACD, going back to the daily chart, the MACD hasn't been a very good or reliable indicator thus far. So we'll just have to see how this thing plays out on the weekly. But a potential support here would obviously be the 50-day moving average. And obviously we need to cross below this thing as well, maybe touching the 150-day moving average here, which has acted as support previously here. So this also is almost coinciding with a Fibonacci retracement of 0.618, which would also correspond to about 3.2% on the 10-year. So on the RSI, we're seeing some, we had overbought levels here on the RSI, and that was obviously the sell-off here in the yields front. So we found some support here at the neutral level, and thus far, you know, the yields front is looking pretty strong. And so these higher yields are obviously going to attract a lot of people who want to lock in these rates. So maybe yields could go down because a lot of people are seeing these yields as a one-time opportunity to sort of like lock in these rates. So, but on the monthly, this thing is just look horribly. Look at this monthly gain. I mean, this is just absolutely how insane this is. We didn't even find resistance here at the extension of 0.618. So we'll just have to gauge and see how things looks like on a day-to-day basis. As long as we're above the 21-day exponential, things are not looking good on the yields front, but we need to cross below this thing, and then we would have to look towards the 50-day moving average as well. Now, I know things are looking a little bit choppy on the technical front, but a good positive note is that we do have stock buybacks coming into the picture, and they're set to return next week as this blackout period that existed in October is set to expire. So now that we have about 80% of the S&P 500 reported earnings, these companies can return to the business of buying shares and then help bolster their stock prices. So if we take a look at this chart here, there's a record of over $1 trillion in buyback announcements made for this year. All right, so this is significant. So as we move forward now into the month of November, we're going to see companies sort of like pouring in money to the stock market. So if we take a look at this chart here, there's a potential of almost $5 billion in daily flows into US equities through year end. But to show you how much of an impact share buybacks are having on the S&P 500, take a look at this next chart here from Pavilion Global Markets, which is showing the impact stock buybacks have had on the markets over the last decade, right? So we're seeing a decomposition here of returns for the S&P 500, and it breaks down that around 21% is coming from multiple expansions. You got 31% from earnings, 7% from dividends, and a whopping 40.5% is coming from share buybacks. So this is quite significant, and as we're going to see these companies starting to pour in more money into the US stock market, that's obviously going to support higher asset prices through the year end. So let's move on to the commodity markets and take a look at natural gas, which has the ticker symbol UNG. And as we can see here, we found support here at the Fibonacci retracement 6%, or the golden ratio of 618 here after breaking down from a rising wedge. And so if we take a look at this thing on a technical chart here, showing some indicators here, starting with the MACD, we can see some upside momentum here, possibly giving us an early buy here. And I kind of like the the risk reward on this thing, because as we found support here at the 200-week moving average, which is also coinciding with the golden ratio. I mean, the risk reward here is anything from 50 to 60%. So I like the risk reward here. And so as we head into the winter season, obviously, I mean, the demand for natural gas could obviously spike up. So that's why I'm kind of looking towards placing a position here. And if we take a look at this thing on a weekly RSI, we're seeing heavily oversold levels here. So natural gas could be something to keep an eye on in the days or maybe weeks ahead. Let's also move on to the crypto markets here, and taking a look at Bitcoin here and see the price action. We can see that it broke above this downward trending channel here on October 25th. And I mean, technically BTC looks a little bit choppy here and uncertain, obviously, but it looks to have found some resistance here at the Fibonacci extension of 0.6 here. Now, if we take a look at, which also corresponds to the 100-day moving average, but if we take a look at this thing on a 2-hour chart, for instance. So here on a 2-hour chart, we can see that it formed a double top here. So maybe we could see some pullback here coming into the week ahead. So we'll just have to gauge the market action going forward. But maybe it's going to test one of the moving averages. We're looking toward maybe seeing the 21-day moving average. But we could also test this thing going back to 20K level. So if we see a pullback in, for instance, the Nasdaq or the S&P, obviously Bitcoin is going to follow suit. But on a bullish note, however, if we take a look at Bitcoin on a monthly chart, I mean, look at this clean falling wedge here. So if this thing were to break out, I mean, we're looking at a target for around $30,000 to $42,000. Okay, so we're seeing tight action here, support at around 20,000 right now. And if we break above this 5-monthly EMA, this is going to be significant. If we take a look at this thing on a weekly chart as well, we're seeing a falling wedge as well, and it has broken above it, so it's very uncertain, so to speak. So we have to break above this trend line as well, and we're obviously below this 200-week moving average. But this is more on a bullish note long term. Maybe we'll test new lows here at around 10,000 before breaking above this lower high trend line. I don't know, but for now we're above that 2017 high. So if this stays above around 20,000, we could possibly see a break above rising wedge as well. So that was a quick note about Bitcoin. I think this is pretty interesting. Now we're seeing Dogecoin spiking as well after the acquisition of Twitter. So maybe the crypto markets will lead the market, the broader market forward in the months ahead. So we'll just have to gauge that. But obviously that was it for we're looking at the preview of the markets, what happened last week. Let's also take a look at what's going to happen for the next week and the week ahead. Okay, so the earnings season is going to continue obviously in the coming week ahead. So far in the S&P 500, around 49% of the index stocks had reported through Thursday, and so around 70% of those had beat earnings, and we saw the beats running about 80% in the industrials. We got consumer staples showing large gains, and obviously in the information technology sectors. Now the biggest losses or the misses were about 50% among the real estate names. So next week is going to feature some earnings here from some lithium stocks. We got chemicals / fertilizers. We got insurers, semiconductors, pharma, and biotech as well. So it's going to be a lot of continuation of some industrial plays next week, and so we'll just have to eye on that. Okay, so we also got some economic data and reports for next week. Now, the spotlight will obviously be the FOMC meeting with an economic policy statement out on Wednesday afternoon. Now, Wall Street fully expects a fourth straight 75 basis point rate hike, and that would obviously lift the Fed's key rate to around 3.75 to 4%. Now, the bigger question is, what will the Fed do next? Okay, because we're looking towards December 13 and February 1st next year. And so are we looking towards a possible pause from here? Are they going to maybe look around? And so that's going to be key takeaway from this meeting, in my opinion. So what they're going to do next, because we already know that they're going to raise by 75. And obviously we also got some economic reports for next week as well. And the October jobs report is going to come out on Friday, and it's expected to show that U.S. employers added around 200,000 workers for this month. Now, we also got the jobs survey for September. It's going to be out on Tuesday morning, and that will also provide another indication of labor market tightness. So lastly, we also got the ISM manufacturing survey index out Tuesday morning, and that could also be another stock market mover, especially if it undercuts that 50 neutral level. So that will be key to watch. So lots of volatility expected for next week. Just keep an eye on that. Obviously, Wednesday afternoon, that's going to be the key FOMC meeting, and you definitely don't want to miss that. Okay, so that was it for today's video. Thank you so much for watching. That was just a quick review of what happened in the markets past week and what we can expect the week ahead. If you haven't already, please hit that subscribe button, hit that like button if you're enjoying the content in this video, and I'll see you guys in the next one, and take care for now. Goodbye.